Financial Freedom Part 4. Hello brothers and sisters, we meet again about the Financial Freedom series. For those of you who are listening to our podcast for the first time, if you find the content is good, you can click subscribe and click the bell so YouTube will notify you of future episodes released. Then this episode is quite long, so let's move on to the main topic. To be honest with you, since writing this series of articles on financial freedom, this episode 4 is the one I've been looking forward to sharing with you. Especially because the content in this episode has a huge impact on my entire personal financial freedom journey, and because of that, I spent a lot of time preparing for this episode. In the previous episode, we also learned about the beginning of the financial freedom journey, from the stage of debt to the stage of independence and then to the stage where we can support ourselves. In this episode we will dig deeper into phase 2, which plays a role in our entire journey. I call this phase the watch and act phase. The milestone in this stage is equivalent to level 4 in our total journey. In our total 12 steps in this journey, this step number 4 is the most important step. It is so important that even if you only need to do this step alone and do not need to do the other steps, I still believe that it will have a huge impact on your thinking and actions. Brothers and sisters, later, the good news is that although this step is very important, it is not difficult to do. There is only one request. You just need to be patient. The reason you need to be patient is because it takes a bit of time. On average it takes about 1 month. But ideally it takes a few months, so now I will show you how to do it. First, it is very simple. From now on you can record all your expenses. That's the way to do it. Please use the note-taking app on your phone. In it, you guys create a section for yourself specifically for recording expenses. From now on, when you make any expenses, please immediately note them in the notes section with the structure I am showing on the screen. There are 3 types of information as follows. The first is the name of the payment, the second is the date of payment, and the third is the total amount spent. And just like that, you can take notes, don't miss anything. Because it only has a few costs, at first glance I thought it was too small and not worth it, so I ignored it. But at this step we cannot evaluate whether it is small or large, whether it is worth it or not. So in this step we just collect data again. And most importantly, how do we take care of that data as completely as possible, and then just like that, when we spend anything during the day, take notes and don't miss it. Now for the second step, you guys can create a spreadsheet for me. You can use Excel or Google Sheets or any other spreadsheet tool that you are familiar with. Then you can create the same structure as me is showing on the screen. Through this we can classify such types of costs for you to better visualize. But personally, I classify it more complicated. But at this stage of your life, I show you the simplest method. You can divide it into 3 groups. The first group of expenses that I call must-have is the type of expenditure that must be spent but cannot be spent. These types of expenses can be rent, or you can buy a house, or it can be money. The cost of parking, gas, or money to go to the market to buy food, for example, are expenses that cannot be avoided. The second group is the expenses that when you look at them you immediately know they are wasteful expenses. This group can be money to pay for parties, drinks with friends, or so on. Whether it's money to buy game consoles, PlayStations or something like that, or random shopping trips, that's the second group. The third group I call the nice-to-have group. The reason there is this third group is because expenses that you do not think are wasteful but cannot be said to be vital. For example, money to go to a certain course, learn a foreign language, or money to go to the gym or buy books. For these types of expenses, you put them all in the nice-to-have column. Having this column will make your classification a lot easier. Because without these columns, there are times when you classify, you will encounter expenses that make you confused and don't know which column to put it in. Now comes the way to do it at the end of the day or every few days. But ideally, at the end of each day, when it's easy to forget, you open that note and update all the expenses you've noted into this spreadsheet. Of course, if you want, you can create a spreadsheet and then enter it directly into the spreadsheet and then categorize it right after you have paid for an item. This way you can avoid having to do 2 steps. However, I split it into 2 steps. Because there are some people who don't know how to use the spreadsheet on their phones, and in fact, even if they know how to use it, every time they pay for something, they have to open the spreadsheet, which is more complicated than opening the app. Note that the most important thing at that time is that we will need speed. Another reason is that I want you to not have to think about which category you should classify it in, especially when you're on the street and busy doing other things. I need people who just need to spend 10 seconds to note it down. The most important thing in this stage is not to miss the task but to classify it, which we can do later. I have shown this method to many people and they have done it quite effectively. You can collect and analyze it. Eliminate each expense like that for a period of time. Remember to complete it from small to large. Try not to miss anything, and my advice to you is that you should do this at least 1 month, but ideally several months. The reason is because an expense does not appear in this month but it will appear in the following months, so when you do it long enough, you will be able to cover all the expenses without paying. If you miss it, after a while, when you collect and classify all those expenses, you will have a pretty clear picture of how much each month you spend on each type of expense. From this paragraph I will use an example for you to visualize. I will use this example over and over again for all the calculation steps in the future, and I would also like to say that I am not very clear about the current standard of living in our country, so please pay attention here. Our examples. Maybe your numbers will be lower or higher depending on each person's standard of living. We have such an example. Now, for example, after the collection time, you can calculate the total. All mandatory expenses that must be spent per month are $1,000. The number 1,000 United States dollars is in this column. The minimum spending level is in the next column. The total of all nice-to-have expenses each month is 500 United States dollars. Then adding this column to column 1. We have a number of $1,500 and 25 million. This is the standard spending level, and in the last column, the total wasted expenses in a month we have $400. This number is also an important number we will talk about it later. Please pay attention to these numbers, especially the two numbers of minimum spending and standard spending, because we use them over and over again in the later stages. Usually they are not like that. So I leave it like that for ease of calculation for the next examples. After finishing, we call this sheet total expenses. In addition, you create another sheet and name it total income, to record all your after-tax income sources. Is after-tax income, not pre-tax income. This sheet is simpler. Basically it is where you enter all your income sources, and the vast majority of you are young. The source of income is probably the main source of income from salary, because if in addition to salary you also do something else, you can add it to this section. The thing I just showed you how to do in business is called a balance sheet, and if you're lucky, your monthly income and expenses will be in balance, meaning your needs will be balanced. Our spending needs are equal to our income level. For example, in the case where my friend's total expenses are $1,900 a month and his salary is $2,500 a month, I have about $600 left over. Luckily, your income is a bit higher than your expenses. If you earn a salary of $4,000 to $5,000, you will have a relatively stable amount of savings. In my opinion, most of the time, if you have a higher salary, you will spend more, but if you are unlucky enough to receive a lower salary, for example, if your salary is only $2,500 a month, you will easily fall into the trap. The case of debt that I will talk about next. Now, please review the income and expenditure ranges above. If you're lucky, in this balance sheet you don't have any lines for monthly debt repayments. Meaning here, if you don't owe anyone anything, congratulations, you can skip the next step. If you are unlucky in that number, there is a period where you have to pay the debt every month. Then you must immediately embark on the next step, which is debt forgiveness. And for me, this is the second most important step in our entire 12-step journey, just after the step of creating a balance sheet above. I have talked about the harmful effects of this debt in quite detail in episode 3. If you haven't seen it yet, you can watch it again. I can leave the description below so you can review it. Now they are starting to take the step of eliminating this debt. The first question is, where is the money to pay the debt? Looking at step 4, I want you to eliminate all the costs in the nice-to-have part. The wasted part means that from now on you will enter a period of being a little more miserable. Being able to live at your minimum means that in this example, from now on you can only live within 20 million each month. This will be the most difficult period for you because you have been accustomed to the old level of spending for a long time, and now you live at a level that is just enough for a certain period of time. It's quite long, and sometimes it can take up to 1 to 2 years. There will be a lot of people who give up at this step. Doing it one day and two is easy, but if you do it within 1 to 2 years, not everyone can do it. Okay, maybe in this part, some of you will say that a few episodes ago, You said that if you take these financial freedom journeys, you will still have a quality life. Why are you suffering so much now? The answer is that you are in a period where your debt is at a negative stage, so the only way to get out of this level of debt is to force yourself to work a little harder than usual. Second, I will talk about this total journey. Have a better quality of life, not to mention this entire journey. Specifically, in the beginning you have to live a little more miserably, and then slowly everything improves gradually in the middle and later stages. Your life will have a better quality. Not every stage will be happy, especially in the first stage when you don't have anything, not to mention that in this case you are still negative, so you must be patient, and I can also emphasize that this phase also lasts up to 2 years. It is not short. That's why I say this journey to financial freedom is difficult. Not everyone can do it, but in fact it's so easy that everyone is financially free. Going back to the story, eliminating our debt means that from now on you will live at a minimum level. All the nice to have and wasted money will be used to pay off debt, and now that you have money, you can do it. Give me something like this. Go to the bank and open another account, ideally different from the one you are using. For example, now you are using Goldman to receive your monthly salary. Now you can open another one at Citibank, for example. Note that this is just an example. I am not advertising these banks. You name this new account emergency fund. Why should you name it like that? I will explain later. The reason I advise you to open this account at another bank is that goal is to separate these two accounts into two completely different places. This emergency fund account should be as hidden as possible. Then you go back to the account that receives your salary, which in this example is the Goldman account. You can set up a schedule for me to automatically transfer money. For example, every month you receive your salary on the same day. For example, the first day of the month is the first day. For example, if you set a money transfer schedule, the next day is the second day of every month. It will automatically transfer from your salary account at Goldman to Citibank, which is $600. So where can I get it? So where do I get the figure of $600? This is the remaining number of your total income of $600 after deducting the minimum expenses of $1,900. The essence of this is that we are reversing the way of accumulation. This means that the vast majority of people usually spend their money and only use it as savings at the end of the month. Now, every time we receive a salary, we immediately save some of the savings and put it aside. Then only spend on what's left. This way, you'll be able to force yourself to live according to your needs. If you keep money in front of you, it will be very difficult to control, especially in the case of using a credit card. Just swipe the card freely at the end of the month and pay off the debt. That's why you have to make the accumulated amount as hidden as possible, as if you put it aside and forget about it, and that's why sometimes we skip the steps. Track your spending in the previous section. Having that step will ensure we have enough money for our basic needs, because if we don't, then we will be short, and if it is short, then we will tend to be lazy. Go to the emergency fund section to use it. After setting up such an account, from now on our cash flow will run like that. Each month, the salary will go into a separate account of $2,500. Immediately after that, it will withdraw $600 and transfer it to the emergency fund account. This means that from now on, every month there will be an additional $600 in the emergency fund account, and this emergency fund account will be used for emergencies in the future. And at present, the most urgent is ours. Are in debt, so it should be our highest priority at this time to use this account to pay off debt. This phase can last up to 6 months or 1 year or even 2 years. Just focus on finishing it until there are no more bad debts. When I reach that milestone, I will have good news and bad news for you guys. The good news is that from now on your life will be much easier, because from now on you no longer owe anyone any more money each month, and you will no longer waste money on interest from banks. That amount of debt, and from there, you guys have a free path to focus on building your next financial foundation. As for that bad news, if you want to continue, you will continue to live in this minimum situation for the rest of your life. A long period of time. Specifically, after the debt is gone, we must immediately embark on the next step. And this episode is already very long, so I will stop here and see you guys in the next part.